This is Cece. Welcome back to The Orbit. It is Friday, November 3rd. Futures are higher again this morning, trying to complete a very strong week for the market. The payrolls number dropped this morning and it was slightly softer than expected, which has Treasury yields down once again this morning and stocks higher. And we're looking right now at the SPY chart. You can just see that massive bounce of over 5% this week. With this rally, the SPY has almost completely recovered those bad 2 weeks you see on the chart. Now, we have a 0.6% expected move for today, 0 DTE. The market is already a 0.5% higher, so it's already almost covered that pre-open. Now, this is something we want to talk about because the VIX is now 15, down from 22 last Friday. This was mentioned yesterday on the Orbit. And what traders need to be very careful of, and this goes for 0 DTE, this goes for weekly income type trades, this goes for even looking out, weeks or a month, is in rallies like this, when volatility starts to compress, obviously those expected moves compress. And what a lot of traders find is that those upper strikes that they are selling in the form of credit call spreads, covered calls, the top side of an iron condor, quite close to the money. And so traders need to be very careful that they are not getting taken out on those strikes to the upside on income type trades. Now, what do you do to combat that? Like we talk about a lot on the Orbit, you can take those sort of expected move levels and maybe expand them. You're going to be getting less, risking a little bit more to make less, but you're giving yourself some room. It's something to look at and at least consider. In fact, let's look at that for next week's expiry. Let's look at like a weekly income setup on the 1 month chart. In this case, let's look at an iron condor and see where that setup is. What we've got here is, we've got those upper strikes up near those highs from 2 weeks ago, not highs, but before that steep decline, that 2 week steep decline happened. And we have these strikes to the downside right in the middle of that 2 week steep decline. So this makes sense, this setup and where these strikes and where the expected move is set up. But if we were to take this and say, all right, well, that downside, those downside strikes spook me a little bit because this rally has been so fast so far. We would be looking to take those strikes down a little bit. So let's just take those down to 422 and take this one to get that $1 wide. And now what we've done is, you can see we've reduced our potential max gain by making it slightly wider, but we've given ourselves more room to the downside if the market were to reverse next week and go a little bit lower.